Hey guys, it's Mark here. Thanks very much for answering that question for me. I was actually very surprised at how many people have sole trades. So it's just under 2/3 of you who answered that are actually sole traders, which is really surprising for me. I want to make this message for all the sole traders there, specifically the sole traders who are doing very well at the moment. I know we're in a pandemic, but the ones who are trading successfully, but also the ones who are looking to build wealth. And this is vital. If you guys have accountants, if you're a successful sole trader, you're looking to build wealth and you have an accountant and they're not advising you to convert to a limited company, they're doing you a huge disservice. Why do I say that? Because you're literally handing over money to the government to revenue for no reason, absolutely no reason. You could be contributing to your own financial wealth instead of giving it to the government. And you can only do that if you have a limited company. So apart from that, there are loads of other benefits to having a limited company, like limited liability, for example. You know, like if something bad happens to your business, they won't come and get your house and your car and the shirt off your back. They'll only take whatever assets the business owns. You can also sell a limited company very, very easily compared to a sole trade, or you can sell pieces of it. You don't have to sell the whole thing. You might just want to sell 10, 20%. You can't do that with a sole trade. But the biggest benefit to having a limited company is diverting cash away from the taxman's hands. Now, what I mean by that is we did a specific example with a pension provider, Kevin Henry from the pensionstore.ie did a great sort of scenario analysis of two 40-year-olds, one who has a limited company, one who has a sole trade. Both have the exact same business. They both want to retire at the age of 60. Because of the limitations on how much a sole trader can essentially put away into their pension and how much a limited company can put away in their pension, which is basically a sole trader, for a 40-year-old sole trader can only put 25% of their wage away, whereas a limited company can put 6,250 per month, so that's a lot higher. And what we found out was that the sole trader will retire at the age of 60 with just over 500,000, and the limited company director will retire with over 1.6 million. Now, how does that make sense? Well, it makes sense in this way. Over those 20 years, all of the first of all, cash was not given to the taxman. It was put into a pension scheme and it was just expensed to the accounts. Apart from that, once it went into the pension scheme, it started earning money, started replicating itself. That's what money does when you invest it. And thirdly, in the pension scheme, there's no taxes for gains. Whereas if you did that privately, if you tried to invest in something privately, you would have gains once you sold it. None of that applies in the pension scheme, so the money just keeps accumulating, and you're able to put more and more into it, so it works harder for you. So anyway, guys, my call to action for you, if you're a sole trader and you're successful and you're looking to build wealth, is to go and ask your accountant, why the hell am I not a limited company? Why am I continuing with this? And it could be, just keep in mind, it could be a case that your accountant hasn't a clue how to convert sole traders into limited companies or how to deal with that. It could be a case they don't care about you. Could be a case they don't even know about the benefits of having a pension scheme, for example, that can do that, how to build wealth. If you think that's the case, come to us, talk to us. I'd be happy to have a conversation with you. My email is mark@firstaccounts.ie. That's mark@firstaccounts.ie. And we can have a chat about building wealth for your future. Thanks.